Thanks for joining us on Power Lunch. This is Bloomberg Quint and I'm Ira Dugal. Let's get you the headlines. The Bank Nifty shows signs of consolidation after touching the 30,000 mark. Benchmark indices give up morning gains. The rupee is set to post its sixth straight week of gains as inflows continue to come into India. The US Federal Reserve cites slowing growth to signal status quo on rates for the rest of the year. The government reaches out to SpiceJet to take over Jet Airways' grounded planes as it looks to avoid job losses ahead of elections. That's a Bloomberg News exclusive. The BJP comes out with its first list of 184 candidates for the general elections. Most union ministers retain their constituencies. Amit Shah replaces L.K. Advani from Gandhinagar. Let's first take a look at how markets are faring. Darshan is here with us.
Yeah, not so great, Tira, at this point of time. After a strong start, at least the Nifty Bank hit the 30,000 mark, both firstly on the futures and then on the spot, has managed to correct significantly from that level. It managed to correct over 300, almost over 250 points from that level, has managed to recover slightly from the lows. The Nifty also, after a positive start, is now going down, but has recovered from the lows of the day. What is doing well is the real estate sector. The index is up almost close to 2%, but apart from it, the other indices are rather muted in trade. What is doing well? Some of the high beta counters have managed to do well. The counters like Arcom and Reliance Naval among the F&O stocks are doing well in trade. Just Dial continues to impress on the positive side. Castrol and a couple of metal stocks like JSW Steel and JSPL are doing well. Among the large caps, it's L&T which has managed to hold on. But on the losing end, you have counters like an REC and India Bulls Real Estate and ICICI Prudential and the oil marketing companies which are not doing well as of now. Among the larger companies in the mid-cap space, Prestige Estates is up almost 9% currently. GVK Power is up another 6%. But apart from it, no big moves coming in the market. Muted activity at this point of time.
Darshan, thanks so much for that. That's the equity markets for you. The US Federal Reserve on Wednesday decided to hold interest rates steady and indicated that there would be no more hikes coming in over this year. The Fed also indicated that it would slow down the pace of balance sheet normalization, which will eventually end in September. Bloomberg News' Kathleen Hayes reports.
The Federal Reserve went into this meeting with this consensus forecast for 2 rate hikes in 2019. The economist survey Bloomberg did suggested that it would be moved down to 1 rate hike this year. Instead, boy, when those headlines came across, no rate hikes at all, that really got attention. Jay Powell, his press conference, cited strong economic fundamentals. He acknowledged also there's been some weak data. And he said, well, it's a great time now for the Fed to watch and wait. Let's listen.
The data that we're seeing are not currently sending a signal which suggests moving in either direction for me, which is really why we're being patient. We feel our policy rate is in the range of neutral. The economy is growing at about trend. Inflation's close to target. Unemployment's under 3%. It's a great time for us to be patient and watch and wait and see how things evolve.
So it's kind of like Jay Powell said, everything's fine now, and we're happy just to sit back and not have presumption of doing anything. Second from the left-hand side of your screen, you see something that almost looks, well, it's a cone, right? And what that green line is going through is that middle consensus now for no rate hikes. There's people, I guess, who were even maybe thinking of a cut or not convinced at all that anything's going to be needed this year. And above that, still some people who see more. The Fed definitely getting dovish here.
All right, let's talk a little bit about the implications of this turn from the US Federal Reserve on Asian markets, particularly the currency markets. Joining us on the phone line is Rohit Garg, Director of Asia FX and Rates of Bank of America Merrill Lynch. Rohit, thanks so much for taking our call. My first question to you is your first analysis into what we heard from the Fed, both in terms of interest rate trajectory and also their timeline for balance sheet normalization, which ends in September.
Yeah, so the outcome of the FOMC was definitely a bit of a surprise to us. We didn't really expect the FOMC to actually turn that dovish, even though that was sort of a risk scenario. So it definitely has quite a bit of implications in general for emerging Asia. There are 3 main implications I would actually say. First one is dovish Fed definitely results in some sort of softening in the dollar in general. The second big implication is now that the Fed is actually pausing for this year, and of course the end of QT is probably going to be earlier than expected. what it then actually means is we can actually see some sort of portfolio flows flowing into Asia. And then the third big implication is definitely, the central banks within the region that were actually hiking until last year, they definitely have a bit more of breathing space in terms of either keeping policy unchanged or even actually ease if and when necessary.
Rohit, going to pick up on some of those elements in a slightly greater detail. So first, what's the call on the dollar index from here on, given what we've heard from the Fed?
Yeah, so we've in general been dollar bear for this year. So, given that and we were precisely expecting the Fed to actually, become a bit more dovish given the U.S. growth trajectory. But it's just that the Fed became dovish earlier than our expectations. But nevertheless, that doesn't really change our call on the dollar. We are still quite a dollar bear over here.
Okay, so that means just on that basis, at least you would expect strength in the Asian currencies. And then, of course, the fund flows, which may be stronger than earlier anticipated, add to that strength broadly as a basket first?
Yes, for sure. So, yeah, so I mean, a softness in the dollar will definitely add fuel to the fire in terms of portfolio inflows in the region.
Okay. Is there a preference that you have in terms of what Asian currencies are better placed right now, Rohit?
So in general, given that this has become a very carry-friendly environment, the preference for us is generally to gyrate more towards the high-yielding currencies. So in that sense, I would say the likes of Indonesia, India, and Philippines will probably be the ones that will benefit the most out of the soft dollar environment.
Okay. Rohit, the other fundamental sort of change one can talk about is the fact that, the Fed's action has come on the back of an expectation of global growth remaining muted. We've seen the ECB also take a similar stance. That would then suggest that at least demand side pressures on oil will not be that strong. And that, again, is positive, at least for currencies like the Indian rupee?
Yeah, for sure. I mean, so far, yes, in general, the demand pressures for oil will generally be muted. What we really need to actually see is supply side pressures. On those things, things are just looking quite okay, even though Saudis are generally looking for deeper cuts. But so far, I guess the demand side pressures are probably overwhelming the supply side pressures, and that's why, oil in general has remained quite soft. So what that really means is for countries that are heavy oil importers, especially like India, that bodes quite positively for them.
Rohit, also the fear that there would be some amount of money returning towards the US because yields there were rising. That equation also changes now because US yields have come down. Well, I'm not entirely sure how Indian yields will behave next year, but the real differential is still quite high.
That's true, yeah. So in general, the rate differential, the bond yield differential between the emerging markets and US is still very wide. So that, again, actually helps in the sense of portfolio inflows in the region, especially into the bond market.
All right, Rohit, just one last question. This is, slightly more longer term, but we've been wondering whether this is something that should be discussed. So, over a period of time, not on an annual basis, the inflation differential between the West and India used to be far wider than it's expected to be now in future years, because we are expecting inflation to stay at least in the 4 to 6% band, which is the target. Should those inflation differentials narrow, do you think there'll be a reassessment on the kind of annual rate of depreciation over a period of time that the rupee will, sort of bear out?
And that's a very good point. I certainly do think that. So if you actually see in the last, I would say 1.5 years, in general, inflation in India has actually been quite low. In fact, even on a structural basis, I think India's inflation will sort of remain low as compared to the history. If you look at the CPI basket, for example, you'll actually see that the proportion components within the basket that are actually exhibiting a less than 3% inflation, that's been gradually increasing. So I do think that on a structural basis, in general, India is experiencing lower inflation, which then again bodes quite well for currency in general.
All right, Rohit, always a pleasure speaking to you. Thanks so much for joining us on the phone line. That's Rohit Garg of Bank of America Merrill Lynch. The Fed's change in both their rate trajectory and their balance sheet actually should be seen as a fundamental trigger over and above what has already been happening in the currency, which is an appreciation driven by flows and steady oil prices mostly. But the same question was actually asked to Economic Affairs Secretary Subhash Chandra Garg, who spoke to Bloomberg News earlier, and he believes that foreign investors are confident of the long-term fundamentals of the Indian economy and that elections are unlikely to have a bearing on that. In this conversation, he goes on to speak about the data revisions as well, which have become a point of debate.
foreign investments have been flowing in steadily in India for last many years, so to say. This year was no different, despite the oil price rises, which we saw very heavily in the first half. But the portfolio investment money, both on equity side as well as on the debt, did see major outflow in the first half when the oil was rising so fast. But in last couple of weeks, the equities have seen major inflows. Debt outflow has also stabilized. So it's not pouring in, I wouldn't call it that way. And I don't think it's much to do with the Pakistan situation or the otherwise, but it's broadly based on number of factors, oil being one, the economy doing well, as well as possibly some sort of confidence in the community of global investors that possibly they will see the stability going forward.
Mr. Secretary, the expectation seems to be amongst foreign investors that Mr. Modi is going to win the election, and that is going to provide that stability. It is not a foregone conclusion, though. Should India be ready for some volatility in terms of some of those flows that we are seeing into the country over the last few weeks?
I also get this sense of what you're saying, that a lot of people who are waiting on the sidelines, thinking about what kind of election results might be, and that money was in a way waiting game. Many of them seems to have taken a call that its risk of waiting might be somewhat higher than not investing. But certainly the results will have to be awaited when finally the results come. I don't see large amount of volatility being there, but because the probability of the other result might not be very good. But I guess we should wait for the results to come and see how things get there.
Mr. Secretary, last week 108 economists from around the world raised questions about political influence on high-frequency data out of India. How do you respond to that?
See, I have very clear advice on that. The data have been revised, which is a fact. The GDP data was revised in last couple of rounds, including the data for the 16-17 and 17-18, but that data revision is based on facts, actual data inflow. It's not based on any presumption or anything. So it might not appear to be meeting people's expectations or some, but that data revision is, or the projections revisions is based on the real data. So I don't think it should be suspected. The results are there for everyone to see. It does affect, so this year's GDP has been somewhat revised downwards based on the GDP revision of last 2 years upward. So in a way, it has hurt the current year's GDP projection. So it's not that any revision which is done has positive sort of messages all over. The current year's GDP, as I said, is revised downward because the base has gone up. Yes. So I don't think there is it makes good sense to dispute or doubt. It's better to take it as it is. And I do confirm that's based on the real data revision.
All right, let's move into corporate news. SpiceJet navigated through all the turbulence in the Indian aviation industry to emerge a notch above the rest. For the first time in over a year, SpiceJet clocked higher passenger growth than the market leader Indigo. Samit Sarkar has the details. Samit.
So if you see for the month of February, SpiceJet's passenger growth was at a faster rate compared to its larger peer, that is Indigo, that is for the first time in the last 14 months. And this is in a condition where the industry growth was the lowest in the last 5 years at around 5.6%. Now you can see here, SpiceJet's passenger growth compared to last year was nearly 17%, while that of Indigo was close to 15%. In this industry growth was subpar at 5.6%, which was the lowest in the last 59 months. Now why the industry passenger growth rate was so low at 5.6%? Firstly, it was because of the flight cancellations that we had seen and because of higher fares. Now India's largest airline company, that is Indigo, had to cancel nearly 30 to 40 flights on a daily basis starting Feb 12th because of operational issues, that is the pilot shortages that the company has been seeing. For Jet Airways, the flight cancellations were because of the grounding of the aircraft due to non-payment to lessors, while in Mumbai and Bangalore, if you see, flights were cancelled because of the runway shutdown. So in short, the flight cancellation and higher fares led to this fall in the passenger growth rate that we have seen in the month of February. Now if you see for Jet Airways especially, the troubles are not only related to the financials, but on the operational front also the company has not been performing well. If you see the company's passenger growth rate, that has fallen to has seen a fall of nearly 28% compared to last year, which is the biggest fall reported by Jet Airways since it began its operation, while its market share has come down to 11.4%, which is the lowest that the company has seen since it started its operation. On the passenger load factor, which measures the capacity utilization, if you see for all the major airline companies compared to last month, the passenger load factor has improved, but compared to last year, the passenger load factors are still still down. For SpiceJet, if you see, this is the 46th consecutive month where the company has been able to report a passenger load factor of 90% plus, but if you see compared to last year, it has again fallen by nearly 230 basis points. For Indigo, Jet Airways and Air India and Vistara, the passenger load factor has fallen in the range of around 100 to 340 basis points, while that for Go Air and Air Asia, it has improved by around 200 to 380 basis points compared to last year. Lastly, in the market share front, if you see, Indigo's market share has increased to 43.4%, while that of SpiceJet has increased to 11.7%. Jet Airways, as pointed out earlier, the market share has come down to 11.4%. Now here, if you see for Tata Group owned airlines, that is Air Asia and Vistara, their market share has also increased to 5.1% and 4% in the month of February.
All right, Somin, thanks so much for that. Staying with SpiceJet, the government has turned to the budget airline to take over some of Jet Airways' grounded planes. Sources have told Bloomberg News that the Modi administration has reached out to SpiceJet promoter Ajay Singh in the hope of putting some of these grounded aircraft to use. Saloni Shukla is joining us with the details. Saloni.
It's very important to note what's coming up in the next 2-3 weeks. It's general elections, so the government wants to do two things: obviously save those 23,000 jobs and keep these airfares under control. So these are the two primary things that the government wants to do. What we've picked up from our sources is that the government is in action mode. It has met Ajay Singh, the promoter of SpiceJet, and it is seeking his help to take over at least 40 of Jet's aircraft. Well, it's important because there's synergy between the two airlines. They run almost similar Boeings, so it's important because of that. There's synergy. It will be run under the, if this happens through, then it will be run under the brand of SpiceJet. Also, what we're picking up from lenders is that they have told the promoters, the current promoters of Jet Airways, to resign, which is Naresh Goyal and his wife Anita Goyal, and they have said that if the change in management happens through, then they'll bring a new management. They'll bring an interim chairman. They'll infuse about 1,500 crores of emergency funding. They'll also cap Naresh Goyal's stake below 10%. So this is what is happening right now. There's another meeting slated today, and we'll keep a close eye on that for you.
Saloni, thanks so much for that. That's Jet Airways and the developments taking place there. But what does this mean for SpiceJet? Does it actually make sense for them, or would they be doing this under pressure from the government? Let's try and get a view in on this. Dheeraj Mathur, partner and leader of National Aerospace and Defence Practice at PwC India, is joining us on the phone line. Mr. Mathur, thanks so much for joining us. First, your thoughts on this development where it seems like the government is reaching out to SpiceJet and asking them to take on some of these grounded planes.
Yeah, good afternoon. Well, I think it's a great thing that the government is doing, simply because it is important to keep the, from the sector's perspective, from the economy's perspective, it's very important that the growth and the capacity and the traffic that we have built, we've been the fastest growing market for the last, 10 years or so. So it's important that that be preserved and not allowed to crumble. So, and, difficult times, crisis times require out-of-the-box thinking. So I think purely from the sector's perspective, the initiative of the government is welcome. And, and for the reason that you mentioned, the particular airline that they have chosen, there are synergies in terms of aircraft and so on. So, yeah, I think it's a good idea.
Mr. Mathur, one completely takes on board the sort of national interest, if you want to call it that very broadly in this case, whether it's of jobs or it's of airfares. But, surely SpiceJet was running a certain amount of aircraft on its fleet because that they thought was the optimal level that they could manage. Is this sort of being forced down SpiceJet's throat? Are there conditions under which it actually turns into an advantage rather than disadvantage for them?
Well, I don't think SpiceJet will agree to this. If they don't think that they can do it. Because remember, SpiceJet itself went through some difficult times and they've sort of come out of them admirably and they're doing very well. But I don't think that SpiceJet will agree to this if they feel they can't manage it. Certainly, I wouldn't use the expression it being forced down anybody's throat, but certainly the government is calling upon SpiceJet to step up to the table and help out in larger national interest. And of course, the other fact is that it's not going to be for free. It's not as if it's going to be CSR or anything. It's going to be a commercial deal. So if SpiceJet takes it on, then SpiceJet is actually going to be suddenly increasing its market share and getting that additional revenue.
That would also mean, Mr. Mathur, that if these planes are now under the SpiceJet brand, so Jet then, even if it were to come back through some revival plan, bank-led resolution plan, which was being discussed, it comes back in a far narrower form?
Now, those are details that will have to be sorted out. This is not going to be easy to do at all. This is not going to be easy to do at all because there are all those legal issues of contracts and leases and so on. And they will have to find solutions for them. So it's difficult to say how this is going to pan out at this point of time, but certainly they will have to find a solution for it.
All right. Mr. Mathur, a last word on Jet itself. Seems like there's a struggle at every end to work out a resolution plan now with Etihad. Also, at least news reports suggesting that Etihad is not interested in continuing as a partner. Where does that leave Jet to your mind? Do you see a resolution plan being, easy to work out at this stage?
It's a hard question to answer because, but on the other hand, the lenders have been talking about the promoters either infusing additional capital or exiting. So it'll just mean that of course, they will have to find somebody to buy that equity. Now, whether they do it themselves, or they go to a strategic buyer, what happens? Those are things that have to be, the resolution process will then start moving actually, because right now there seems to be a bit of a stalemate in the sense that there are demands and counter demands and so on. So we need some finality here and have clarity as to who's going to stay and who's exiting. And if people are exiting, then you then deal with that situation. You find you find an equity buyer and then move on. So what we need is clarity and finality on the existing discussions vis-a-vis Jet's revival and resolution plan, etc.
All right, Mr. Mathur, thanks so much for that. No clarity, at least as of now. Let's move away from corporate news and get you the latest on the political side as well. The BJP has put out its first list of 184, I think, candidates for the upcoming general election. Prime Minister Narendra Modi will contest from Varanasi again, while Smriti Irani will take on Rahul Gandhi for a second time from Amethi. Union Ministers Rajnath Singh and Nitin Gadkari have also retained their seats of Lucknow and Nagpur respectively. The one big change is that Party President Amit Shah will replace six-time sitting MP and veteran leader L.K. Advani from Gandhinagar. That's all the time we have in Power Lunch. Thanks for watching. Lot more coming up.